Good morning, ladies and gentlemen. Clueless 8 Trading. It's approximately 8:44 a.m. Friday morning. Historic moment and a historic global sell-off, to say the least. Please take a minute to go over the critical webinar that we covered last night, looking at both the downside, well, specifically the downside of what might could happen, and it's pretty much what happened. The UK decided to leave the EU. Well, it's a referendum, but still. Um, and it sent massive um, ripples, negative ripples to the global markets. Let me just point out something here. These are unprecedented moments, and do not take it lightly. They have fundamental consequences on the global economy, and what happened today determines nothing what will happen next week or the week after or the month after. The shock effects of this particular event is not going to be something that dies away in 1 day or 2 days. This is not ordinary and normal times. This does not mean that the world markets and the US financial markets are going to one-way ride down, but it does mean that risk, in the truest sense, RISK, has risen and will remain elevated for a while to come. This is not just a tactical retracement. This is a crash. All right? This is not a tactical retracement. This is a crash. That is why I suggested very strongly yesterday to take down massive amounts of profits and put out a few small hedges out there in the form of S&P puts. Those S&P puts this morning will pay very handsomely. But do what you need to do, whether you sell at the open, which I think would be suggested, and then go back and revisit again or do whatever you need to do. Remember, on days like today, I cannot guide you on a minute-by-minute basis. These are going to be extremely fast-moving markets, and you cannot ask, oh, well, do you think the market's going to bounce from here? The bottom line is I'm going to show you what the levels are, specifically on the futures, and for traders who have not monitored futures before, well, it's high time you change your behavioral deficiency and start tracking them very closely. All right, that's pretty much what I have to say. Take this very seriously. This is not a joke what's going out there. Just because short covering bounces a stock $2, $3 doesn't mean it's going to stay there. Within seconds, I mean nanoseconds, machines are going to come in and whop that profit away from you if you're actively trading. For traders who are not familiar with these type of situations, I don't think anyone is. I've gone through quite a few different crashes and stuff, but still, I wasn't around for the '87 crash. But I went through a few of them, including the flash crash in May of 2008. So the reality is, you will see you'll see a sharp bounce at the open. Futures were down 104 points down here, okay, to 1998, and they halted the futures at 1999 last night. I was awake, and then now you're seeing the futures down 60, 70 points. So amateurs can come in there and say, oh, well, markets bounced 40 points or bounced 29. Um, market bounced 34 S&P points from from last night. Well, it doesn't mean anything. All right. So let me just show you what I think might happen, and then let the global forces take over and the machines take over what they do. So as you can see here, this is a very let me just get the drawing tools. Okay, so this is the chart going all the way back to May, June, July of last year, of 2016. Okay, so here you have the highs on the E-minis. Again, add about 7 points to it, 6, 7 points, you arrive at the S&P. So this is S&P around 2134, right? S&P around 2134, SPX. And just do this in your head fast, so I don't have to explain this all the time, what the S&P levels would be. Here's your downtrend line, large channel line, whatever you call it. So that intersects somewhere around 2075 on the E-minis. again around 2080 on the S&P 500. Here is where we fell. This is the Brexit candle. This is your flash crash. I'm going to call it FC, flash crash. Okay. The massive volatility, the double bottom, the big move, the heavy volatile movements back in the latter part, starting in September, since we peaked in October of 2015. Then the second crash, the very confirmed um, dragon bullish pattern back in February of this year, January and February of this year, and then this, the big consolidation triangle, played every single one of them, right? Everything's out there. The big consolidation channel, then the breakout, then the fallout, then yesterday. Every single level that I've shown on my charts, and at this point, people who are not focusing on the charts that I put across, I don't know what to say to any of you, okay? Because they are extremely precise to the point where it's uncannily scary. I said we would get to 2120 or so in the E-minis. We got there. Look at the charts posted end of the day and post-Brexit um, on specifically end of the day when the market surged. So here's the Brexit candle. You have so what it's doing is there's your there's your consolidation channel. Let me just move in there right now. Okay, here is where you have some level of support that's around 2030 or so on the S&P 500. Remember, 2020 is a line in the sand. I've said it before and I stand by it on the S&P 500. So we bounced off that level. Lower end of this channel, and I'm keeping this as a broader format so people can see in the context of what this picture looks like. So looking at this, sometime by next week, if things really unravel, you are basically looking at the lower end of the channel here, where you have this blue line. Remember, these lines are large 2,000 point type of plus type of um, trading range, right? Happens over a bunch of months, but that's really what happens. So the lower end of the range remains around that 1800 level with that we constantly test it in. Do I think we get there right away? No. Do I think we get there? Given what's unraveling, there's a possibility. There's no question about it. Maybe not next week or so, but I think I'm pretty positive it's going to happen by September, October of this year. I think so. That's my opinion. Because at this point, technically, the bull market that we are witnessing has cracked. That's it. That's the technical basis of that. Can things change? Sure, anything can change. But I'm just letting you know. There's been fundamental technical damage done across the board on many fronts, especially on the financials. So saying all that, I want to remind everyone, if you think that you could read the market just by looking at prices, well, you just learned the lesson the hard way. Because technically we were overbought. We were going to pull back one way or the other after spiking maybe at the open if Brexit went through. I mean, Brexit didn't go through. And I showed that. We are getting extremely overbought. We hit that gap fill. There was a slightly upper band, and that's it. You would get a retracement channel, but it didn't. But this one was obviously a different story. So this is one. The next level of critical support comes in around the 1950 to 1975 level, right there. Okay? And that happens to be the consolidation channel that that I've drawn for weeks now. So we went in there, we bounced off. What I've also done, there's a lot of stuff going on here. So people who are a little bit technically savvy, they know what I'm talking about. I have this Fibonacci retracement from the highs, all-time highs, to the 1800 level. So these are the Fibonacci lines. These numbers showing up. 0%, 23.6, 38.2, 50%, 61.8, 78.6, and 100%. Don't understand Fibonacci retracement? Google it, learn it. Okay, it's not that hard. So, bottom line is the 50% Fibonacci retracement is a standard. I'm going to get these lines out of here now. Is a standard move. All right, the 50% is basically on any type of large trading band type of move. The 50% retracement is something, believe it or not, that happens more often than not. That's a mathematical thing, and this happens with stocks too. So over a period of days, weeks, I don't think months, yeah, maybe months, we will get a 50% retracement. That 50% retracement is exactly the confluence of the lower end of this consolidation channel, right? Right there. That's an important number. Below the 50, you can start counting 1928, and of course, you got lower numbers. But I think this level is the one that if somebody is very bearish on the market and all the fronts, and of course, at this point, you have to be you have to take a bearish stance. There's no question about it. That that this is the level you're watching. So 1975 from where we are right now is roughly, let me see, 1975 to 2035 or so is 60 points. So multiply 60 times 7 or so, because each E-minis are about 7 Dow points. So let's talk about another 400 points on the Dow that we have a downside to go. When you look at it that way, it's really not that bad, right? So the Dow Jones Industrial Average can fall another 40%, I mean, another 400 points in order to create a tradable, real tradable bottom. And I'd like that, given the circumstances, to happen sooner than later. Okay, right down here would be a strong buying opportunity. Also happens to intersect with this mid, I'm sorry, this line here, which is drawn from the pivot, from um, previous inflection points in the market. This one. Okay, just go with it. So that's it. So at this point, I'm going to zoom in now. So at this point, make this very clear. You have one line here, which I've drawn and purposely drawn. That is your major inflection points, and that intersects at around 1985. So that's one level of support. Second level of support is obviously the 206 on the E-minis, which is roughly where we bounced off from overnight. Let me just zoom in. There you go. All right. Big reversal candle, but not good enough. Okay. There's going to be a lot of forced institutional margin selling. So expect some heavy duty selling over the next 3 to 5 days after the market bounces. Remember, higher prices, the margin clerks come in and they start smacking and taking out the margin calls, right? They want a small bounce so that they could sell into that bounce to recover the margin calls that have been generated, especially specifically institutional margin calls that have been generated due to this debacle with Brexit. So, saying all that, the next level is 1985, and then you have this. This would be a real terrific tradable bottom where you could trade the market for a good 50 points or so, which would be good for about 350 points on the upside, right there. Whatever the case, let's keep this simple. At this point, the bounce will be capped at the 78.6 Fibonacci, which is around this level here, which was major support. That's around 2051. So don't get to be a hero. Oh yeah, market's turning around, everything's fine. Everything is not fine right now, okay? There's structural damage and it'll fix itself. We don't know the how the Europeans are dealing with this or the Asians are going to deal with it, but you can expect some massive intervention by global central banks, not in the form of rate cuts and stuff, because rates are already almost zero, with other instruments that they have in their hand. Okay? Remember, through every crisis, there is opportunity. And a lot of the times, what I've seen over the years is that you have the politicians and the central bankers, believe it or not, when they at the point of maximum doom and gloom, do somewhat of the right things. There's an old saying saying man changes at the edge of the abyss. Okay, at the face of abyss. So bottom line is, if this is the sort of the Armageddon, then mankind will change somewhat in order to change their habits. Man changes at the face of abyss. Okay, the worst possible time you say, okay, we're not going to do that anymore. All right, So anyway, so here is one level. This is where, I don't think that's support, personally speaking. And this is a daily chart I'm talking about, not a short-term chart. Because, and again, warning, don't try to attempt some big type short-term trades. I'll be doing different things. I'm not going to be going crazy. I'll try to post as much as I can. I don't have big long positions, so still going to get hurt on the longs. But the short positions on the S&P and such, the Tesla short, these type of things will work. So we'll see. Let's take a look at the internals here. Okay. So by the way, if we go above, if this market bounces above the 2060 level and back above this white line, the uptrend, the upper end of the uptrend, downtrend line from way back in May of last year, then that negates a sort of a real deep bear scenario. At that point, the back test of the rising wedge at around, believe it or not, over 2100 comes into play, and anything is possible. So that's one scenario that's a uber bullish scenario right now. The other scenario is that we come down here, test this level, possibly try to bounce. If we fail here, then I believe that these major inflection points in the market over the past year or so will come into play, and that's between 1975, 1980 E-minis, roughly about 1980, 1985 on the S&P 500. But I don't want to get into this too much. I've already explained what the levels are. In the meantime, this is what's happening on the daily. Looks like, we're not, believe it or not, through all this thumping, we're not fully oversold yet. Isn't that crazy? That could be construed as a positive divergence, or it could be construed as there's more selling to come. At this point, I'll go with the latter. Okay, I'll go with the latter. I would like to see the market in a panic capitulative mood, basically come down here, because once you get towards these deep oversold levels and the McClellan oscillators, which are not indicating yet at minus 200, minus 300, minus 400, we could get minus 300 on the McClellan oscillator. That Then that's the point where you can make it tradable buy. Whatever you do, keep your position sizes small. You've got to be aggressive in this type of environment. Unfortunately, I have to say that, because both on the long side and the short side, and of course, I'm here to guide people as much as I can. But remember, I'm only human. Doesn't matter how robotic I try, these are unprecedented times. Thank you for your support. Tell all your friends and colleagues you have no idea how to navigate these markets to come and join us here at Clueless Trading, and have a fantastic day. Thank you for listening.